I want to go over them and demonstrate how pin bars work, and how the fakie works, how the inside day works, and how the 55% retracement works with currency pairs. Now, the first one I want to look at is the Aussie dollar. I've got that up on the chart. I've already drawn the Fibonacci retracement levels. You have the first impulse down to the left of the chart, then we had to move up, and then we completed the C leg down, so A, B, C. This is not Elliott wave, this is just pattern recognition. So down, up, down. This move down, this big volatile swing from up 94.70 down to 89.53, is not a tradable move in my eyes if you're a retracement trader. If you're just purely trading retracements, you wait for that move and then you sell the retracement, which is what I did. We had the first retracement up to the 55% level here, and you can see we had some bearish rejection pin bars and then subsequent fall off. And you can actually have confirmation here. The 8 and 21 moving averages are actually cross negative. So there's a confluence of factors there, and these are the setups you need to look for. An impulse down, a retracement, some price action to confirm, and then go short and market on the close of these bars. This is just a daily chart. I mean, this is the type of things you need to start looking at, is when you get your 8 and 21 crossed, means you've got momentum down, and you've got these pin bars forming, and then dramatic bearish price action. Okay, another one very similar to that was the British pound. Well, let's just get this one up. Don't know why it's not loading. Let's just put the video on pause. I'll see if I can get that up. Okay, we're ready to roll. British pound, US dollar, and cable to others. Okay, we have an awesome looking pin bar that formed here. You can see this big red rejection bar was a signal to get short. And again, I'm going to demonstrate how to place Fibonacci levels on your chart. Most people look at Fibonacci as some kind of pie in the sky method. Well, I'm here to tell you that it is a very profitable method when used correctly. Used on daily charts, it is the most effective. And we use the 50% and the 618 level, and I can adjust that. And I just usually put the 55% level because that is a true retracement level. We come down, we come up, we hit this termination point. We have a massive rejection bar, and that for me was a seller market. Okay, and then we have 3 big bars down. So these are just some retracement setups to have confirming price action. Now the last one is the euro dollar. I've been talking about the fakie setup. I've got no idea how many videos I've done on the fakie setup. Now I'm going to go over the fakie setup again because a lot of people aren't paying attention. This setup has like 80 to 85% expectancy. It is just the bomb. Right, so we have the euro, and just before I go on with that, I do want to quickly point out that markets rarely do this. They really go down and then straight back up and then make a new high. So it's something to watch out for. This is like a V. It rarely goes up. So it really goes down and then straight back through. So there was resistance. Okay, the market obviously stalled at 158.95-ish. That was the previous high. Okay. Previous high. You see that? And then we actually have an inside bar here and an inside bar here. So bang, bang. Those 2 bars were inside this big up candle. We then had the subsequent breakout. Okay, now I don't take breakouts that are under major resistance. I just don't take this pattern. I know this pattern does not have a huge expectancy of breaking out. So no, I didn't take that breakout up. What I did was go short. Now the reason I went short is because this is a fakie setup. Okay, if you didn't spot that already, it went up and failed. It was an inside day breakout that failed. And then they stopped out and they've shorted and they've pushed this market lower. And as you can see, the 21-day average here is about the target, 155.23. I wouldn't be surprised to see this thing rotate under 158. And that's really the 3 setups that I've liked. I mean, if you're not entirely sure about this fakie setup, you got to email me or post something in the forum. I mean, I've explained it that many times. And a lot of you just aren't grasping it. I mean, it really is something that's traded on a daily chart. It's basically the the opposite ends of a winning trade. Someone's going along on that move, okay? And they're stopping out as this market reverses, and that creates a selling vacuum. So all those that went long have to get out, and then people start short selling into this move, and it manifests into a massive fall. And that was your 1 day 200 point move. I mean, that trade there has such a high expectancy. Okay, now I just want to have a look at some current setups that are forming. Now, a lot of people will look at the market and see like a British pound chart, and they see that the setup came off we just talked about. Okay, well, the setup's over, we can't get back in. Well, not necessarily, because once a market begins to trend off these setups, all you have to do is look for a logical entry point within the trend. And for me, that's the 8-day average, 21-day average if they're close together. If they're not close together, you use the first entry as your 8-day average. If it's volatile, you might go for the 21. I can't tell you which one to sell, but I can say that if the market comes up into this area, I'd expect resistance and for the market to roll over and test the lows. So, intra-week, if this pushes up, you'd sell short. Or I would personally sell short. Just remember, I'm not giving signals here. I'm trying to get you to feel the market out, learn your own strategies with things that have been successful for me that you can use in your own trading arsenal. That's the British pound. The Aussie dollars is a very similar chart. You've got an 8 and 21 day moving average crossover. These things do work in the market. You've just got to know how to use them. Just waiting for that to load. You can see the 8 and 21's crossed. You can see the pin bar is your major resistance reference. So if it was to rotate up into this resistance area, say 91.28 to 91.28 to 91.66, that's an ideal resistance level, and I will be considering shorts up there. Euro dollar did terminate. There's no reason this can't go straight back through, right through those highs. I don't think it's going to happen personally. So based on the fact that the month is open, the week is open, and we've pushed straight down, I'm thinking any intra-week strength is a selling opportunity at this point. Remember, markets rotate in the weekly time frames. So knowing that this chart is heading down on the week, any strength to me looks like a selling opportunity, and I think the same pattern as that week there will happen this week. Playing with the market and just waiting for ideal entries, tight stops, and large rewards. That is the name of the game. It's just about risk reward and where is the market going. Don't try and pick a bottom in the euro here because, well, there's no confirmation in price action. There's no support level. The 21's your nearest support at 155.27. That's the 21-day EMA. Right now, the only data we have is that the market's rotating down after a fakey setup, so we know that the momentum favors shorting. And really, 154 was that previous support level. Could come all the way back down there. That wouldn't surprise me. Paying attention to the market and reading what is in front of you as opposed to thinking something is there. There's the key. Patience, waiting for the market to come to you.